Hi, Patrick, Kevin, hello, Face. How's everyone doing today? Everyone doing okay? So yesterday we went over the peso, right? And Grega was talking about maybe one more low. We already had 3 drives. But Blake was pointing out the relative strength of the peso over all the other weak dollar pairs, Canada, NOK, etc. Who remembers? Give me a while. You're in Houston? Wow. It's biblical there, man. Wait a sec. Okay. So looking at the peso, I'd be looking to buy breaks here. Maybe between here and here. 61.8 to 78.6. Wrong under the low here. Yeah. Yeah. Good to be dry. So the euro, I can't buy it up here, I can't sell it up here. Same with the pound. Dixie doing nothing right yet. Interesting look in all, the guppy went to the target I talked about the pound Aussie went to the target when I was talking about it in here last week, 350. A little more uncertain here, but I would still favor buying this, risking the lows, thinking there's another shot up. Maybe to the 200, 420, maybe even to a back test line around 5.5. So here's your line in the sand. Right? Line in the sand right here. And that would measure up there. Well, it's supposed to be a vertical line. Basically, this is it. Hold on. You guys get the picture, right? Back over that level could take you to 550, right back to here. So that's an important level. Everyone see that? And then this caught my eye here. S&P's under pressure. Could be a failing rally to short Aussie yen here for another low. Okay, looks weaker than euro yen, which might make a new high. The guppy is still very weak. A little messy here. I don't know if it's going to hold or not, but the pattern in Aussie yen looks tasty. That we had a big spike, and this is a retrace here, and you have to be wrong over 87.10. We get over this, we could go to 88 for a better short, but this looks like a possibility to me. And I just want to wrap it with the S&Ps and the bonds. North Korea tension. So back here, this was a 3 drive, right? And then late last week, I said it could be incomplete. We might try and hold here, but it looks like we could have 1, 2, 3 down here. Give me Y if you see it. This was a 3 drive right here on a fractal. And this would be a bigger one. 1, 2, 3 at new lows. Everyone see that? And then I just want to show a long-term picture in the bonds on the 10-year. Then I'm going to turn it over to Blake. Okay. So they look very strong now. With a little risk off happening here. But maybe the S&Ps make a new low. Here's a week. This is a big picture right here. Right here. Weekly. I'm not saying today's the day. But we've gotten rid of so many bears with this high here and now this high here. And really, as strong as everyone thinks the bonds are, this looked impulsive. According to Steve Volge would say impulsive, and I'd say corrective, worked off the oversold condition more in time than price, most likely coming into some fib zones. Between here. And here. So we're not even 50% back of this big break. So I think between here and the most 61.8 is going to be a great bond short for the possibly the final quarter. Everyone see this? Maybe Luca's in here. Steve warned that we could do this when we were here. So we came off here and we're squeezing shorts again. I still think this is a major trend right here. And this is a corrective pattern. Not sure what to call it, but it looks corrective to me. Any questions on anything I've covered today? We have a great guest today. More at Ascar at futures _ 71, I believe. 30-year? Sure. Looks even weaker. This is a weekly. And Ash is saying DAX looks bearish too. So I don't have DAX here, but I have the German 30, which is probably the same thing. Yeah. Rolling over. Okay, Ben, I concur. Anyone in here like being in face every day? Did you notice I started a minute late today? Were you worried that face wouldn't be here for you today? Anyone have an anxiety attack? You were worried, Kevin? Brooks knows me. I was just making you wait. A minute wasn't too bad, was it? So, you were late too? Did you bring a note from your mom? Windsor, do you have a note from mom? I may have to put you in face detention. You know how that works. Yeah, yeah, Windsor needs to go into detention. I'll bounce you out of the room for 30 minutes. Don't try and log back in until your detention's over. Anyway, you know what has my attention? Are my teammates. Blake Morrow, Steve Volge. You know why? Because I already know what I think. And I want to know what they think. Because they're both Grandmaster Technicians.
Good morning, Dale. How are you?
Thanks for your patience. Good, buddy.
Hey, what's happening?
Waiting to hear what you think, buddy. Very good instinct you had on peso.
Yeah, thanks. I actually bought it. I bought it yesterday. Sold it last night in the spike up at like 93. I rebought it today at like 83. So yeah,
So,
I mean
it's doing great with the dollar still not looking good. What's going to happen when the dollar looks good? You know?
Yeah, so that's the thing. It's been outpacing the rest of the dollar pairs. Okay, so before I get into the peso though, I had written down 3 things this weekend when I was doing my weekend analysis. I wrote down, I want to buy the, and I have it right here, buy the US dollar Canadian at 123.25. Wanted to buy the dollar Swiss at 94.50 and long the dollar peso if it gets above 17.80. So I ended up buying the peso early, and I actually let me clarify a couple things. First of all, here's a Swissy, and the Swissy is at 94.50. This is the place that I talked about it, or I wrote down, and I'm like, okay, well, you know, this is multi-year, you know, support. I want to get long if we get down here, but we're down here for a reason, and it's not necessarily a good reason. You know, we're down here because there's insatiable appetite to own Swiss francs right now because of a, you know, missile that was launched over the Japanese airspace. And so therefore people are running for safety. They're looking for anything that's going to give them some safety. And the safest currency right now is going to be the Swiss franc. So there's this appetite to buy Swiss francs. So I'm not interested in buying the dollar Swiss anymore. You know, just because I write down a price, like I want to be long or I want to be short here or here, when we get to those levels, I have to realize why they are there. And so, you know, just for me to be long the dollar Swiss right now, technically it makes sense to buy it here, especially if we just push new lows. You know, we pushed new lows and may have just got a few people stopped out. Yeah, and maybe a little false breakdown, and maybe this is the right place to be long. I just don't like the reason why we're down here.
You know, two key things, and it'll be great for the community. First of all, you write things down. Okay, so, you know, Blake's been doing this a long time, and the fact that he writes things down doesn't count on being able to remember what he was thinking yesterday when doing analysis. That's something everyone should do, is write things down. And then the second point is you wrote a price down, but it's not just a price, it's how it gets there.
Exactly. And
okay.
and so that was you know, that's one thing. So I had wrote this down on Sunday or Saturday or whenever I did my analysis over the weekend. And I know I wanted to buy the dollar Swiss down here, but now that we're here, I'm having second thoughts because of the reasons why it's here. All right. Now, I also I ended up buying the dollar Canadian early. I bought it because last night we pushed out of this descending wedge. I got long at 125. I think my cost average is 125.10 right here. And, you know, it spiked up to 125.35 and it came all the way down and it came really close to my stop. So I put my stop below the wedge lows. Now, I really ultimately wanted to buy it down here at 123.50, and we may actually end up going down there. It's crazy because the dollar Canadian had this insatiable appetite yesterday. Like, it couldn't go down. I mean, it was just going straight up yesterday. And then you can see when we found out about the weapons launch, it was right here. We had limited follow through and we came all the way back down again. I still own the dollar Canadian. You know, I don't like how we, you know, kind of came back into the wedge, but at the same time, if the market becomes a little risk averse, and crude oil, by the way, one of the other reasons why I bought the dollar Canadian yesterday is because crude oil was really underperforming even after Harvey. So I'm not, how should I say, disenchanted with the trade thus far. although I won't ignore the fact that we can still come down here. So if I get stopped out and I have to go back and get long at 123.50 like we talked about yesterday, I'm gonna do that. You know, I'll go back in again. I don't have a problem doing that. But I am watching the dollar Canadian now. As far as the peso goes, so I bought the peso yesterday early because this was the same type of thing as the Canadian. It was just ripping yesterday because, you know, crude oil was weak. There's a little bit of risk aversion. Well, actually, there wasn't even risk aversion. It was just going up for no reason. And I picked it up just right around this 1780 level as we punched out of this channel. And what we've come back down is come back and retested basically a channel breakout. So I bought it again this morning because I sold it yesterday after we found out about the North Korean missile launch, because I wanted to take profits. What I should have done is held on to the dollar MEX and sold the dollar Canadian, but we can't trade in hindsight. Yeah, we can't trade like that. So I mean, obviously the better choice would have been sell the Canadian because it was underperforming, and keep the peso. And I would barely be underwater right now with the peso, or I'd be like, you know, slightly positive. So again, this is, you know, you can't trade in those types of situations. But I did sell it last night up here. I rebought it again down here, and I'm still long. I think this is one of those. If you look at the dollar Mexican peso, you look at this channel we've popped out of. This is pretty bullish. And again, if you look at the dollar, and the dollar is so beat up, if the dollar has any type of bounce, it should play well into the U.S. dollar Mexican peso, and the dollar Canadian for that matter. Because yeah, if you look at the euro dollar, you know, and I talked about it yesterday, I wasn't chasing it, but I wasn't going to short it. Okay, it continued to rally. Now I did start to nibble on the euro dollar short today. I did, as we hit
21 there.
Well, we hit the previous support from 2012. Okay. I literally got short at 43, so I'm short just. And it's really small. It's not a. Yeah.
The daily is diverging, but the 1 hour is not. The 1 hour is confirming. But you know when I talk about divergences, like you know, you could diverge for a while on a longer time frame and go broke. So it's nice to have shorter term time frames confirming what you see, like on a daily.
Yeah. What I thought I'd show you guys really quick is I thought I'd show you the DSI that I got last night, and take a look at this Euro FX.
Yeah.
All right.
Yeah.
Look at the dollar index. These are very extreme readings. 93 for the euro, 10 for the dollar. So yeah. that doesn't, this right here makes it, I don't want to say makes it okay, but it makes me feel better about you know, trying to cherry pick a high up here. So that's why
you have You have no company. That's why you like it.
Yeah, the sentiment is extremely bullish the euro right now, and extremely bearish the dollar. That doesn't mean that the dollar can't be 8 tomorrow or today, or it can't be 7. You know what I mean? We can go lower in DSI, but we're getting towards extremes now. Well, we're already at extremes, and we're really at some pretty major extremes at this point. So I'm not opposed to trying to be long some dollars at this point. Now, will I find myself wrong-footed? It's possible, you know, and I'm not banking on this whatsoever. I'm not going to feel comfortable about the euro dollar until it drops back below 120. You know, so even if I'm short a little bit, which I am right now, I'm not comfortable with it, and I doubt I'd even hold it overnight. To be honest, I can't imagine unless the euro does a complete 180 about face today. You know, where we drop to 119.50 and then I'm sitting in a 100 pip gain. You know, then I might hold on to it. But the chances of that happening today don't seem realistic to me, because there's no economic data that's going to drive that type of reversal. So again, I look around for the reasons why this could happen, and I don't really see any. So even though I shorted a little euro, I don't plan on staying in it. And I mean, if the thing drops back down to 120, and I make 45, 50 pips, I'll probably take it off the table and then move on. And it's small anyway. I know I'm going very counter trend at this point, so I don't want to be too aggressive here. A couple other things that I want to point out, and last night I tweeted out a chart of the S&P. This is an important support that we held today. Now you can see after the missile strike last night, and this would be last night. You have to go look at the 4 hour from last night. We spiked down, we hit that trend line support, right? And we bounced back overnight. Even in Europe, we made a marginal new low and bounced back. This is very important support for the S&P. If the S&P breaks today's lows, that would be a very bearish event for the dollar. How the dollar would respond to that, I'm not too sure. I don't know if the dollar will become, more vulnerable, or if the dollar will become bought as risk aversion comes in. I do not know that, because we haven't seen enough evidence to really come to draw any conclusions at this point. But the S&P did come down to really key support. We have to be, very cognizant of that, and we're bouncing from there. Now, you aptly pointed out the bond market, and I want to show you the 10-year the 10-year bond market here, and I want to show you this this resistance we're knocking our head up against, and it's pretty key, especially longer term. If you look longer term, we're as you pointed out earlier, this is on ForexAnalytix. Yeah. We're knocking up against some resistance here. So if the bond market reverses and comes down a little bit, yields would go up. The dollar that would benefit the dollar, at least near term. But we'll see. We'll see. How the stock market or how the dollar responds here. The dollar also. Let me go over to the dollar here on ForexAnalytix. I want to show you a chart that I posted this morning. The dollar index. Here's a 4 hour chart. We're very oversold. You can see how oversold the 4 hour is. We also hit 161% extension of the flag consolidation. So, or really close to. That doesn't mean the dollar is going to reverse here. We have a flag pattern that points towards 90. All right, the actual flag pattern points, it goes all the way to 90. But we could bounce back to, like, let's say 92.50 in the dollar, which could allow a little bit of a bounce. And the way I see it playing out, frankly, is I would see the dollar yen going down, and yen pairs like the euro yen, the pound yen, the Aussie yen, the New Zealand yen, those might actually go down too. So we might see yen strength and dollar strength at the same time, which would allow for a little bit of a dollar bounce as far as the index goes. But you can see that the index, I mean, we're closing in on this 161% extension, and like I said, the flag pattern actually points to 90. I mean, if this flag plays out completely, we're pointing to 90. We're already testing multi-year lows in the dollar index, which is scary. I mean, you think about, we've got gold breaking out. Gold's, and I'm sure Steve is going to want to cover the precious metal, so I won't take that from him. I'm sure he wants to do that. But I don't want to cover everything and leave him with nothing to cover. But
Stelios does.
Yeah, and Stelios may want to take a look at what's happening with silver.
As he, Blake, I'll have a lot to talk about anyhow. We've had plenty of movement.
Yeah, Steve, I never I should never worry about you running out of things to talk about.
He has it stored up for a week.
Right. He's got pent up demand right now for talking. But the dollar index is breaking multi-year lows, and that we have to be very aware of, because you got gold breaking higher. You've got the dollar that looks just weak. on several different fronts. Anyway, Steve, I'm gonna pass it over to you because I'm gonna get ready for the open. But it's nice to have you back. I know you were on the webinar last week, but you were traveling, so you're traveling and handling the webinar as well.
Yeah, I did my best.
Well, it's good to have you back in full swing, and guys and gals, I want to wish you good luck today at the Open. And Steve, I'm going to pass it over to you. Dale, have a great day, and thank you, guys.
Thank you, Blake.
Okay.
Hi, Steve. How are you, buddy?
Fine, Dale. How have you been? I hope everybody's well.
Everyone feel good to be back in the saddle?
Yeah, have a nice week. I'm guessing this is more or less the last week of vacations for plenty of people.
Yeah, the adults come back from the Hamptons next Tuesday.
Okay then.
The Hedgies will be back.
And we definitely have quite a lot to talk about. If you remember to begin with, I don't want to go over the same things that Blake did, but yeah. I mean, we were quite clear here, and we had made sure to explain to people that the euro wanted to go higher. Draghi would have to go a long way to persuade the market not to keep buying it. Draghi did absolutely nothing. He gave us nothing on the euro, no commentary, no nothing. Just afterwards, some bearish talking about, inflation, etc. But the market didn't care anymore about that. And since the ECB doesn't mind to care about the euro, the euro got bid, and now the next target is the 50% fee, but 121.67. Obviously, we are, somewhat overbought here, but I really don't see any reason why the euro is going to turn lower for good. I mean, obviously, nothing moves in a straight line, but I'm guessing that 119 being support from this point on, which was roughly the high here, we should be good to achieve the target. We also, for people that hadn't seen that, Greg had mentioned that a long time ago as well, we had a gap that needed to be filled at 120. Let me zoom out. It was back here. There it is, which we actually filled. So now this gap is filled as well. And I think the euro keeps looking good, and it's not only against the dollar, which obviously is battered and beaten quite a lot. It's also about the Aussie, which we had like this big channel which we broke to the upside. It's against the Kiwi, which we cleared the previous high quite some time ago. Although you should be a little bit careful here. We also issued like an update, because if you also see the 4-hour chart, the euro Kiwi hit a channel resistance and is reversing from there. So I think after 2, 4, 6 consecutive updates, today was and still is the 7th. I think that some retracement here is overdue as well. So obviously this is not the time to be buying the euro Kiwi. It was lower. Against the CAD, it's also decently strong, despite the CAD resuming to show strength. So the euro looks against the yen, as you very well said on your opening, we most probably going to be hitting new highs. I mean, the correction lower, as you see, is also clearly an ABC, and the move that started higher is most probably impulsive as well. So I think that euro yen is going to be hitting new highs more likely than not, especially after it broke this corrective channel. I think that we already wrote back there that new highs are more likely than not coming, and nothing has changed with that. So euro looks good, all around the board. Now, having to do with precious metals, since Blake mentioned those, we can have a look at them. Obviously, we had a very decisive break higher in gold. I mean, we said last week as well that gold looks good to the upside, and it's very likely to break it, but there was no reward to risk ratio to actually get long there. So you might like something on occasion, but that doesn't mean that all the proper elements for you to take a trade are there. And gold was one of these cases, because you either bought it down here on the retest of this zone, and then you could hold being long. But if you just wanted to buy it here, there was a problem with having your reward to risk ratio. Having said that, gold is also hitting the resistance of an ascending channel we had here. So I would caution that this is also not the place to buy gold. Obviously, this is textbook, but if we get a retest of the 1,300 level, obviously that's going to be a much better opportunity for somebody to be looking into buying. Okay. And silver finally, after a very long time, because look, we had said plenty of times how many days we had spent like oscillating between the 1670 and the 1720 zones of support resistance, finally also decisively broke out. I remember that I specifically said that these two should break together. So if we saw gold break the 1300 level, that should also mean that silver would make the move to the next zone, which is at 1775, and this is exactly what happened. So silver has not reached that zone yet, although we're now close. And that's another area that if you're long silver, you should probably be looking to to take off some of your longs, or anyhow reduce somewhat your risk. Now, having seen that, let me see what kind of questions we have, because now I'm back at my computer and stocks actually. Yeah, we can talk about stocks. First of all, the DAX. There was a friend asking you also at the beginning. Listen, the DAX behaved very nicely because it was an ascending channel. We got an overthrow. We got an ascending wedge. We got a little overthrow from that, and since it broke below it,
it never broke out over that area. You were going to get long if it broke out.
Yeah, and
you didn't want to buy the U.S., but you said if we broke out in DAX,
exactly. I said
about 12.3 or something.
It was 12,325 to be exact. Was what was the confluence of this descending channel resistance and the possibility of an inverted head and shoulders neckline. That's why you don't jump the gun. You know what I mean? Because it never actually broke above that. If it did, I would have bought it, because that would have been a good opportunity to go long risk, and I wouldn't want to be buying US stocks. It never did, so it keeps respecting the descending channel. The next area of support is 11,800 roughly. It's a general area, which the channel support is a little bit lower as well. So we need to see what's going to happen from there. But needless to say, no matter what happens with risk, the fact that the euro remains very well bid is also hurting the DAX. So the DAX has two things going against it at the moment. First of all is the fact that we remain very sensitive to risk aversion. I mean, personally, I was thinking when I woke up in the morning and saw that, I had the feeling yesterday night that there was a chance that when I woke up in the morning, the risk would be bid again, in the sense that we would have recovered most of the losses we suffered yesterday night due to the North Korean missile launches. But that didn't happen, actually. And to me, this is another signal as well that the market is very jittery at the moment, because it's a combination of factors, mostly political and geopolitical factors. And although I'm of the opinion like that 3 months ago, such an occasion like North Korea launching some missiles over Japan, which actually didn't hit anything or didn't start a conflict.
I saw a great tweet, Steve. I have to interrupt you.
Yeah, sure.
The tweet showed Kim and one of his generals, like talking to each other, and it shows Kim saying, "I said lunch, not launch." You killed me. Anyway, go ahead.
Yeah, that was good. So I'm actually of the belief that 3 months ago something like that would have created an initial knee-jerk reaction as we saw, but within a few hours the market would have completely recovered. The fact that the market has not done so says a lot, and in my opinion, one of the things it says is that the market is actually more or less sick. I mean, it doesn't have the momentum and the strength it used to have, and there is a lot of disbelief for many of the let's say moving factors that have propelled us so high.
You know, so, I saw a good point made by Tim Seymour on CNBC yesterday, and you know, he's normally bullish, but he said, you know, this is the longest period of time the S&P has stayed under its 50, has not been able to recapture its 50-day, and you were showing it on the last one. Look how many days it was under the 50-day, the S&P.
Sure, I'm going to turn it now. Let's see.
And then look back, and it always recaptured the 50-day.
Immediately. Yeah, immediately.
Look at it, and it hasn't.
Last time we were below it for a big period of time was this this corrective move. Yeah.
But since the election, it's held it pretty good.
Definitely. Every time we penetrated through it, we bounced back above it, like mostly.
So the 100 would be next, and maybe the 200.
Yeah, let's see. The only sure thing is that, having said all that, the 2,400 level is still holding, and you know that's.
You know, I'm a long-term bear, Steve, but something in my gut tells me that I should be looking for one more panic low in S&Ps for a buy, take out the recent lows. One more push up in bonds to take position shorts, and you know. And probably short in the gold if I'm right about the S&Ps. Just my gut trader instinct.
We'll see about that, Dale. The only sure thing is that we don't have a reason yet to be technically bearish.
No, not yet.
Bearish SPX. Yes.
I mean, I came up with that sitting under my pyramid this morning. That's all.
By the way, because some people are also checking it from time to time, and they have been asking. The FTSE also suffered greatly today for both the reasons the DAX did. I mean, the pound, and this is something we were looking together. If you remember, we had said that 130 wouldn't hold this time, but we needed to see what 128 would do. 128 worked like a charm. We rebounded from there, so we've got some nice beat coming in for the cable. The question is what happens now, because now today actually we once again entered and tested like the general 130 zone. So what happens from now is actually going to show us what kind of a move this move was. So it's very interesting to see what's going to happen here in the cable. Obviously this is not a place to be long. And to me, the fact that we created a morning star formation on 128 was, telling me enough, but not enough to get involved. I want to get more clarity. I want to see which of these two zones is going to get penetrated first. Is it the 130 zone from below, from beneath, or is it the 128 zone from above? So this is going to tell me a lot. Cable is still very interesting to monitor. It's working out very nice technically, but I don't have any conviction yet of where the next move is going to be at. But I think we're going to get an answer to that, within the next few days. Now, let's have a look at a few questions. Can we look at Gappy and Aussie Yen? Sure, we can. Blake, Arif is asking Blake to have a look at the DAX. We just had a look at it together. Pound Okay, yeah, we can look at the pound crosses as well first, since we just talked about the pound. Let's have a look at the pound crosses, because we have a question for that before we go to the rest. Okay, pound Aussie. Listen, pound Aussie could even have found a bottom yet, but I don't have enough signs yet to be convinced about it. Okay, I was expecting another move lower from here. We got that. I mean, we got a new low. It doesn't mean, I mean, we might never test the channel again. But on the other hand, you know, this is not convincing of a rebound for me to believe that we did find a low. So I'm neutral at the moment. I mean, of course, if you have to be something, you have to remain bearish, because we're still within the descending channel. But, you know, I'm more cautious now, and I'm looking to see what's going to happen from here. Obviously, if we get another move lower, you know, my initial intuition about it is going to be fulfilled, so I'm going to be feeling better for seeing a move higher. But you know, that's what I see with the pound Aussie. Pound Kiwi, on the other hand, which has remained like textbook range, gave us one of the same once again. I mean, we got a reversal there. We got a retest of this range, and once again today especially we're showing a major failure of this, since we're already posting an outside black candle, an outside shooting star in this specific occasion, which if we close, you know, more or less like we're looking to close at the moment, you know, this is going to be another major rejection from this area of resistance. So, you know, pound Kiwi needs a lot of patience. You either decide to trade the range, which isn't small, it's 500 pips, although for this kind of pairs, 500 pips is not like, you know, very, very much, but still. So you either trade the range, or, you know, show more patience and, you know, see which side this is going to break, and then trade the breakout. Okay. So let's go back to our questions. We had a question about the gappy. Sure. Let's have a look at it. Okay, we had a rebound on the gappy, 3 consecutive days. And I remember it was, I think yesterday I wrote analysis about that. Yeah. I said that, you know, the next resistance is the 200 EMA at 142.30, and then we also have the triangles support that should now act as the resistance. And, you know, unless we get a break above there, you know, there is no reason to be convinced that this is a true reversal. We did have a piercing line forming here, which is you know, a strong bullish reversal candlestick, but you know, we have been bearish for a period of time, so you know, I remain very, very cautious. We might get a deeper or stronger anyhow correction higher, but you know, I remain very cautious because simply we have made some technical damage here which hasn't yet been undone. Okay. So you know, be careful with the gappy. It's kind of mixed at the moment. As I said, we had some reversal signals here, but today's candle, you know, is putting that into question, especially as long as we remain below 142.30. So these are the levels to watch. Now, having to do with Aussie yen. Okay, Aussie yen, I had it also on a 4-hour chart. Aussie yen seemed to be in a consolidation, which looked very, very much like a triangle. We can have a look at it here, actually. This is a 4-hour chart that I'm going to pull. Okay, so so we had a triangle here, which in this case, you know, the first move lower, then a triangle, then you expect, you know, another move lower, which we seem to be getting yesterday with this spike, but we completely reversed this spike. I mean, we reversed this spike enough to get ourselves back in the triangle. So somebody can claim that, you know, ignoring the wick here, we are still in a triangle. So I have to say that triangles are continuation formations. We had a move lower. So one way or another, it seems more likely to me that the next move for the Aussie yen, even if it proves to be, a constructive structure altogether, is going to be lower. So I would say that as long as we remain below, call it 87.10, a resolution to the downside for at least one more leg lower is more likely than not. Okay. So that's what I see with the Aussie yen. Palladium, sure. Let's have a look.
I like your planet screen cover.
It's actually multiple. It's a different screen on its. It's a different background on each of the screens. It's like a theme. It keeps rotating them. It's quite nice actually.
This is Major Steve to ground control. David Bowie's son.
Palladium. Okay. First of all, our friend is mentioning the monthly Palladium candle, which you don't need to pull up a monthly chart to have a look at it. In the sense that this is the start of the month here, and as you see, besides a very initial move lower, we've grinded higher ever since, and we're currently at the highs of the month. So you can see that already. But on the other hand, I have to tell you that Palladium is almost knocking on the door of this channel of resistance once again. So this is what we saw back then. This is exactly what happened, and this is now an area that I'm really looking forward to see if it's gonna produce some big reversal. So like between 950, 960, because this is an ascending channel, so the resistance keeps going a little bit higher every day. I'm really looking forward to seeing a big reaction, because I will gladly actually short it. Okay. So yeah, I have no doubt that the monthly chart is very bullish, but I'm actually closer to trying to find the top here than anything else. Euro pound. Yeah, Euro pound has been the nemesis of many. I have refrained from shorting it, but to be honest, I'm probably going to be doing that quite soon, because it's, it has overthrown the ascending wedge that we were looking at. It has also tested and is retesting today this ascending channel. It has already produced, like, the vast majority of the candles since, the beginning of August have been bullish. This is definitely a pair that has a very, very bullish monthly candle. If you look at it, I mean, you can already see it. You can already see it from the weekly, from the daily, and you can see it here as well. And if you see the Euro pound, this is going to be the fourth consecutive monthly, white candle, and it's actually the longest one of all. So yeah, it definitely looks very, very strong, but personally I'm going to be looking to short it, sooner rather than later. I mean, I would even short it today if I saw a very big reaction of it. So for example, if this candle reversed and ended up being a shooting star, which would also be a key reversal, because we would have made another new high and then closed lower in the day. For example, I would immediately go short. So, this is also another currency pair. Keep in mind that also the RSI is currently at 81.6. And, if in a sense, Blake showed before the DSI, the Daily Sentiment Index, and he showed the DSI, specifically he pointed out the dollar index, which is very bearish, which it has been more or less for a long period of time, and the Euro effects. The Euro DSI is at 93 at the moment, with a maximum of 100. So that's very, very, very bullish. But on the other hand, the pound DSI is very, very neutral at 57. So the DSI also points to a possibility of a snapback for the Euro pound as well. So given the much overbought RSI reading, the fact that the sentiment is extremely bullish at the euro, and the fact that that technically we've already exhausted plenty of technical patterns, it's also going to be a very nice false break initially because we've barely broken out of this high. So I would love to see like a collapse of this and a move lower towards the 88, 50, 70, 60 zone here before looking for higher prices. So I know that Euro Pound looks very, very strong. I'm not short, I'm not long, but I'm looking to be short quite soon. I agree with you, Rob, and we will have a look at it now, having to do with Rob is mentioning the Aussie USD, saying that the move looked corrective, and I agree with you. We had said since here that I said that I either expect a break to new highs from there or a move lower maximum to retest this triangle support and then a new high. So as it seems we're not going to go that low, and I remain a believer that we're going to see one more high, and it certainly looks strong. I mean, just look at the way it got bid after getting offered due to the whole North Korea risk that we had. Just look at today's candle. It's an outside white candle. You see that the lower wick is very, very long because at some point it was much lower and it completely reversed, and it's going to close. It looks like it can easily close higher on the day. So yeah, I think move towards 81 is in the cards for it. Steve, despite today's pullback, pound Kiwi is in the apex of a multi-year triangle consolidation. Near over. If you ask me, major trend reversal coming above 180 confirms. I agree with you, Luca, in what sense? That I'm more inclined to see it break to the upside than to the downside. And I'm going to show the chart you're talking about because Luca also put the chart, and here it is. Okay, so I'm in agreement with you. I'm also a believer that it has more chances of breaking to the upside. So we agree on that. But I just cannot convince myself to get long as that range resistance is still holds. If I see the range resistance break, I'm going to be all over it. Trust me.
Yeah, pound Aussie has something similar. I think this has more relative strength because we've put in two higher lows compared to pound Aussie.
Yeah. So
nice look, Luca.
So a friend is asking for USD CAD, and this is a good opportunity to show USD NOK as well. So USD CAD made an effort yesterday. It gave us a piercing line, which is potentially a reversal candle. Then it looked like it's going to resume lower and collapse, but now again it's getting bid, and it's about to give us a pin bar. It is a pin bar at the moment, but it's too early. So listen, before I believe that this thing is bottoming here, first of all, I want to see what kind of a candle we get today, because yesterday we got a piercing line. If today we get something bullish once again, I'm going to be more inclined to believe in it, because I have to remind you that technically speaking, I was looking for one more low. So I need to be convinced that we're not going to get a new low. And I'm not convinced yet. Okay. The USD NOK, on the other hand, which I also expected a new low, not only has given us a new low, it also has accelerated lower. And today's candle is, despite showing an effort to rebound earlier, it's once again turning bearish. I mean, it's currently a shooting star. So I remain short the USD NOK, since we said on the webinar, Dale, and this is still the only trade I.
The layup.
Yeah, this is still the only trade I maintain, and I see no reason to abandon it, since it still looks good. So unless I see a reversal here as well, I would be very, very cautious with USD CAD, because the technicals on USD CAD still tell me that we should get a new low there as well. So I'm not saying that it cannot reverse, and I'm also saying that another bullish candle today, in combination with yesterday's, is going to put some thinking to me. It might even convince me if I see some kind of a bull candle in the USD NOK to take profits there. But I need more evidence. I don't have them yet, especially given the fact that crude has been weakening, and both these pairs cannot really mount a recovery, right? So imagine if, by the way, I know that a crude question is coming, more or less it is. I have a target for crude at 45, so a potential like a three-leg like correction. I think it, as I said the previous week, as long as it remains below 49, I maintain a slightly bearish outlook on the short term, but I'm not convinced yet that we should be looking lower on the longer term. So I'm more inclined to believe that we're going to find some kind of a bottom, towards 45 and then move higher again than the opposite. But I think we need to be a little bit more patient with it. Okay. Steve, you were talking about gaps in the Euro USD. There is one right down around 108, isn't there? Do you think it will be filled at some point? Oh, Catherine, that's a very tough question, because do I believe that Euro USD is headed to 108 anytime soon? No, I'm not. But who knows down the road, years down the road, I mean, who knows? But no, I'm not looking to see this gap getting filled anytime soon, I have to tell you. I mean, my fundamental thesis about both the dollar and the euro would have to change dramatically, which would involve events that I cannot foresee at the moment, for 108 to be hit again, within a reasonable period of time. So, of course, FX is going to keep trading in perpetuity. So, yeah, at some point, there is a very good likelihood that it's going to be filled, but I can't see that being anytime soon, so for us to bother about it. Okay.
It's a breakaway gap. Breakaway gaps. Well, we just filled a gap at 119.98.
My pleasure.
That had left, I don't know, around 8 months, almost a year ago.
Yeah.
So,
and in the past, we've had gaps that stayed unfilled for much longer periods of time, Dale.
Yeah.
Let me see. Oh, by the way, Blake talked about the USD Swiss. Obviously, the USD Swiss is, at a very, 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 very precarious position here, because it's testing the low once again, and then the only thing I have is an ascending trend line, which passes from these two lows, which comes somewhat lower from at around 93, like 60 or whatever. Currently, actually passes from 93.50, which also coincides with a 127 fib. So that's the next support I see in the USD Swiss. But obviously, if we get more tensions, geopolitical, especially and serious risk of tensions, you should expect it to, you should expect the Swiss to be well bid. Now, on the other hand, Euro Swiss still remains. We keep redrawing it, obviously, because when you have a pattern in development, you might need to redraw it a little bit. So it's in some kind of a consolidation here, but I'm still more or less convinced that, once this runs its course, this is going to be a very nice long once again. So, I'm viewing this as a corrective move after a very big rally. And I think that trying to get involved from anywhere between 112.60, 113 is probably going to end up being a good trade, because unless all hell breaks loose, I don't see any real resistance until the 120x floor that the S&P had put in place. Kiwi, yes. Dale, do we have, by the way, today
Yes.
an interview? Okay. Okay, Kiwi, was showing very good potential for a head and shoulders formation, but it rebounded at the last moment, from this well-defined, support resistance level, which doesn't mean that it's bullish again, because as long as we remain below 0.73, 40, 35, 40, call it, there's still a potential that we're forming the right shoulder. So in my opinion, this level and the 0.72 level are the two levels you need to watch to see if actually this is going to end up being a head and shoulder, in which case we're going a lot lower, or if this was simply a corrective price action after a breakout and we're going higher. So we're currently more or less in between these two levels. So from my point of view, not much to do here, but you definitely have two levels to watch so they can show you the direction once any of them do break.
Thank you very much, Steve.
My pleasure, Dale.
Thank you,
Have a wonderful
Blake. Thank you, Steve and Morad. I'm going to make you the presenter now, and looking forward to hearing your voice and seeing your screen. And this will be my second interview with future_traders71. Looking forward to it. How are you, Morad?
Hey, can you hear me?
I can hear you clearly, yes. How are you, buddy?
Good, how are you? Thanks
Good.
for having me on.
Oh, you're very welcome. I'm always appreciative after putting people through an interview if they're willing to come back.
I appreciate that. It's been a while, though. I think the last time we talked was probably, I don't know, 4 or 5 years ago or something like that. I don't remember.
Boy, yeah. We're older. We're older and wiser, right?
Hopefully wiser. I can't guarantee that, though.
So then why don't you refresh my memory and give us, the community, an idea of how your trading journey started, how you got into the business. Did you have influences? How did you end up being an S&P trader, Morad?
Okay, I'll try to keep it to 5 minutes. Okay. It's a long story, but I started out as an equities, high volume equities trader. I've always traded in a prop or arcade type of environment, meaning always around professionals who did this full time. I started down.
I never heard it called an arcade environment.
Well, when I first started, an arcade, the difference between a prop and an arcade is an arcade, they give you buying power and you get a desk and a computer and stuff, but you still have to put up the money. Whereas prop is risk-free, right? You're an employee, you get a cut of your profits, and that's it. So that's where I started, and then I switched once 9/11 happened and things kind of slowed down in the equity space. I got an opportunity to come up to Chicago and start to trade futures. And at a prop environment, meaning fully backed, fully supported, and with a cut of my profits. So I joined a group in the Chicago Board of Trade and started trading there. Also, basically order flow based, high speed, high volume scalping, so to the tune of around 2,000 to 3,000 round turns per day.
Wow. So is it like a quant and a black box algo?
No, it was all manual, just basically, basically arbing the various markets from the Dow to the NASDAQ, ES, the DAX, and the FTSE and things like that. You just watched for movement, and this was pre high speed algo days, always on the screen. And then after a while, I started my own prop shop and started backing my own traders. And did that for some time, had a very good success rate there. And then at around 2009, 2010, I decided to cut that down and do something else. But in the process, I moved from high-speed intraday trading, scalping, to building structures, to looking at market structures and context and things like that. And with the experience I had with my traders, developing people, actually watching people struggle through the process of learning why and how the market moves, through the process of getting that big light bulb and making the turn, and then finally managing their expectations and just churning away in a consistent way towards being a professional trader. So
yeah, it takes a lot of patience to do that. I know.
It takes a lot of things. It takes a lot of, that's the thing that I've run into. I mean, I came online in 2008 or 2009 and started tweeting, trades with a friend, and I didn't know how Twitter worked, but didn't know it was a broadcast. I was tweeting with someone in San Diego, and suddenly I started to see that I had, a couple hundred followers, and then 1,000, and 2,000, and on and on and on. So my focus has been to move from trading for myself and being kind of in my own little world to doing this in a more of a community, kind of the globe being the prop shop type of setting, and that's basically what I've been working on for the last 6 or so years. So, but I still, I'm a trader first, and I'm not an educator, although I've backing people, it's hard not to be. And my approach still is intraday. I look for, structures that are occurring intraday. I'm looking for, and I only trade futures. I stopped trading equities. Once I was introduced to futures, I never looked back at equities except for, investment type stuff. But intraday or day trading or professional trading, it's all futures. And it's everything from the ES to the DAX to crude to the NASDAQ, whatever happens to be moving and setting up is where I go. So depending on. So that's basically
good story. Interesting journey. So we're looking at, is this an S&P chart here? No.
Yeah. So what this is?
Yes. Yeah. So
yes.
Maybe you could explain some of like the black lines on the right and the profile lines on the left, and
sure.
What you teach.
So this is a day session only chart, which means that this is looking, and I'm in Chicago, so those times are Chicago times, 1 hour, 1 hour behind New York or East Coast time. These bars represent a day session only or pit session only bar for the day, and this is the general overview chart. So this is my daily chart. I do not look on a daily chart at the overnight action, and the reason I don't look at the overnight action is because it is the S&P, and because it is built on the 500 equities that are in it. Those equities are not trading in their primary market overnight. I do refer to the overnight chart during my setup process in the morning, and I do this every morning at 9 a.m. Eastern. I do this thing called a trader bite. For those of you who are interested in sitting through it, it's on YouTube. It's live streamed. I don't charge anything for it. The point is to help people understand the market movement and structure. And what this chart is, it shows what we've done on a daily basis during the pit session. What you're seeing on the right here is what is called the composite profile. So what this is doing is it's plotting out the number of contracts traded at each price going all the way back to the start date of this chart in 2013. The start date of the chart is based on market structure. So the market might have dropped and then started to rise, and then I pick that as a bottom and I start to create a profile from that point onwards. And what this is showing and why it's important is bar charts show you the open, high, low, close. What they don't show you, and we I know there's a lot of focus on FX at face, but which doesn't have a kind of a global volume, consistent global volume presence, because it's traded across many dealers. But in futures, there's only one exchange where a product gets traded, and each trade has a quantity. And so what we're doing here is plotting all the quantities that went off at throughout the bar, and we accumulate them to the right, and that's what's called a volume profile. The classic way to look at this is through market profiling. Here's a market profile chart. This is a classic chart, right, from back the Peter Stadelmeier days from the Board of Trade. But these letters represent half-hour bars. So if I split this profile, this basically shows, okay, during the B period, the market opened down here, and it pushed up, pulled back, then it opened C period here, and each one of these represents a half-hour increment. So the market opens at 9:30, so 9:30 to 10, that's B period, 10 to 10:30, that's C period, and so on. So this represents exactly what a half-hour bar chart would. But what we do is we accumulate it to the left and start to see where the market actually spent time. That's what market profile does, and that's where I started when I started to look at setups rather than competing with the high frequency machines. I started with time, but then I have all this tick data. I have really accurate tick data. I want to see volume. And what volume does is it basically says, yes, you can look at a bar, you can look at the open, high, low, close, but where did the market really trade? Where within this?
Where did people vote with their pocket?
Yeah, exactly. Because you might have a lot of votes here at the high, right? And very little in the body, which means that there was a lot of competition for this price, that this price was not competed, was competed for. It was not an excess high or an excess low. And so once I moved to volume profiling, I started to create this entire approach to it back in 2005, where I'm just studying not only the price action, but where did it happen? So it's almost like price is king. It dictates, that's what we trade. We trade price, we don't trade volume. But volume is the backup. It's the military. It's the execution. It is the force behind the auction. And that's basically what I'm looking at. I'm looking at the auction. How is the market auctioning? So my process does not involve any indicators other than the volume profile, which is not an indicator. It's just a way of presenting data. I don't look at any indicators at all. I don't look at moving averages or anything like that. I'm basically following the auction. So that's the daily chart.
So you're trading naked?
I'm trading pretty much naked. Yeah, I'm looking at.
All right. So do you trade from an office?
Yes.
Or your house? Because you should really only trade naked from your house, Maureen.
I know, but the guys here are used to it.
With your drapes drawn.
the guys here are used to it, and my windows are wide open.
All right, buddy.
That's the daily, and then I break it down into the 15-minute, which is a day session only. So here it looks kind of noisy, but what I'm looking at here, the pink lines are areas that the market traded at the most. So the pink lines represent the prices where the market traded the most volume. And that's what's called a point of control, a volume point of control. So if you look at yesterday in the S&P, the most traded price of the session is 43.50, 43 being a key value down here. 43.50 got the most action yesterday. So I'm still seeing, just like everybody else, I'm still seeing that on a 15-minute bar chart. It opened at 48.25, it went to 49.25, then it started to move lower. We tested below the prior day's low and so on and so forth on a day session basis. But I'm paying attention to where that volume is going. Where's volume happening a lot? Those are areas of acceptance. Where's volume not taking place at all? Those are areas of rejections. Those are called low volume nodes. Like this area here, the 45 this morning is expected to be resistance. If we get back into yesterday's range, we're far from it. We're trading at 24.29 right now with 15 minutes left to the open, and we're leaving several days of trading behind. So we popped up last Tuesday in the S&P. We opened and we went trend up to 54, and then since last Tuesday, the low of last Tuesday and the high of last Tuesday, we've done nothing. Because we've traded inside every single day. Wednesday, inside of Tuesday. Thursday, inside of Tuesday. Friday, inside of Tuesday. Yesterday, Monday, inside of Tuesday. And now
let me ask you this, is there any way to tell, especially with the sideways range of all these inside days, whether or not it's accumulation or distribution by your volume studies?
So I'm not paying attention to Because in futures, there's an infinite number of contracts that can be traded, right? There's no float like you have in stocks. There's no limited inventory. So I cannot tell whether, everybody that traded this point of control yesterday was selling or buying, because for every buy, there's a sell. There has to be a sell.
Right.
Two people in the pit have to agree on a price for the contract to trade. What I do pay attention to that proxies your question whether or not there's accumulation or distribution. What I do pay attention to very, very much, and it's the core of everything that I'm doing, is the market in balance? In other words, is it compressing? Is it agreeing on prices? The more the market agrees on price, and the more people say, hey, this is a good price for me to execute my hedge or to execute my position in the futures, the more likely the market's going to make a strong move away from there. So we see that a lot better on the weekly profile. So you look at what happened here. So these are weekly profiles. We're just looking at every day of the week. So if I split this up, this will show you every day of the week. There's Monday, a couple of weeks ago, the week of the 7th, and Tuesday, Wednesday, Thursday, Friday. This is what the market accomplished during that week. We compress that back together, and we see that week, there was no agreement on price. The auction basically said, look, man, we are looking for that high. We're looking for those sellers when we went up there. So when we went and made all-time highs up here at 88.50, we were looking for those sellers. We found them. We found them on Tuesday. And then since we found them, we are not agreeing on price. It is an excess. We're not able to find those buyers anymore. We've only found sellers. So now we're going to sell off. We're going to start to sell off on Wednesday. And then on Wednesday, we tried to find those sellers again. We found them again, and we break lower on Thursday, and we broke lower on Friday. That was a couple weeks ago. But you look at the week before that, and I'm using this week as an example. Here's a market that is completely in agreement. This is a market that's what's called in balance or has consensus on price. Look at how much they traded at such a short range compared to the week after and the week before.
Yeah.
I'm looking for those. You can call that, you can argue that that's accumulation, but because it's a one buyer for every seller, all I'm interested in is, hey, this thing is balancing. And back then when I did the trader bite during that week, I kept warning that, hey, we are likely to have a big move out of here because this can only consolidate and compress for so long. As more and more people take positions in a tight market, there are more and more people who are likely to get stopped once it moves away from those prices.
There's your compression.
Yes, that's the compression, and then that's the expansion. And then the next week, we get compression early on, and then we get expansion later. So if I split this, you see this compression early on, and boom, there's expansion. Then we find a bottom. We usually reject the bottom because we're always looking for excess. Too much, it's too low or too high. Once we find that it's too low or too high, we bounce back up and we start to balance again. And we balance for a while until we get a new input, new information, North Korea perhaps, some change with the Fed or whatever, that tells us that the pricing in the S&P has to change once again. And that's what we do all the time. And that's basically auction theory, the auction process in a nutshell, except it's not theory. It's something that I use day in, day out to trade. So once I find out what my context or what the market's trying to do, I start to hone in on my trigger chart. And with my trigger chart, I start to monitor what's happening during the day. So yesterday, I start to look bar for bar. What is it doing? Okay, it found its sellers. It pushed up to 49.25. It found its sellers, and it keeps looking for buyers. And as long as it doesn't find buyers, it's likely to continue lower and lower and lower until it does find buyers. Once it finds buyers, we have a nice rotation, a large rotation up. Like here we see a large rotation down, 7 points from 49.25 to 41.50, 7 points or so. And then it has its rotation up. And now the question is, do we start to consolidate and then push through this high, which means that we have found our buyers and we are done with the bottom and we're likely to continue higher? And that's when I start to engage the market. I wait for these. I don't try to catch these big moves. That's not my bread and butter. My bread and butter is to find out who made the big move and what was the follow through. And if there's no follow through, I start to trade in a contrarian way. If the market is unable, if for example, yesterday it dropped, had a shallow pullback, and it continued to drop again with strength, then I'm only trading with the trend. But since we've been in balance for a couple days, I'm looking for a counter trend. I'm looking for it to continue to balance until it doesn't, which means I take a loss, and then that loss is my cost for finding out new information.
Okay, so how do you manage risk after your entry? Using this kind of method, when is your signal or whatever was compelling you to assume risk negated? Is that your stop? You have to wait for your profiles to tell you something else is happening?
Well, I'm using price action with the profile backing up that information. I'm using price because that's what I trade, and then the volume profile just tells me where the trading is taking place. In this situation, so yesterday is not a great example, but we had what I call an impulsive move. Impulsive moves have a large rotation. This means that the market moved down 7 points without a single 7-tick pullback. So yeah, it never rotated.
That's from point A to B faster.
Yeah, and that's an impulse. And an impulse generally gets a continuation. So you have this hard move down, then you have a small pullback, then you have a continuation, a lower low before the market starts to base again and correct. This is just classic price action, classic market rotation. So yesterday, the goal was to get short near that mid. Okay, didn't quite get there. It got there here. The mid is this blue line. The mid is just simply the high and the low of the day. The sum of the high and the low divided by 2. What's the middle? What's the 50% pullback on the entire day's range? I track that, and I'm leaning against it. So the entries right here, I immediately look for a 2-point scale out, because my task as a trader is always to mitigate risk. So I'm not here to catch, on a 20-point move, I'm not here to catch 19 points.
So you take partial profits after you're in the money, 2 handles.
Absolutely, 2 handle, and then that gives me room. That gives me a new average to work from, because now I've got money in my pocket that improves my entry. And then I start to manage it with what I call zippers, these small consolidation areas that basically say, hey, the market's in consensus and it's trading tight, and then I look for those to break. So that's how I'm managing risk. I'm always looking, actually, the tool that I need to show you to manage.
And that's a Renko chart back there, isn't it? Is that Renko?
That is a Renko chart. And the only reason I use Renko is because if nothing's happening, I don't want a bar. I don't want these little dots. So you
use the tails on the Renko. A lot of people don't use tails at all, do they? Using Renko?
They use bricks. They don't use
bricks.
tails. I do want to see the tails, because I want to see where the excesses are. So it's a candlestick, but it's using a Renko in terms of how far the market has to move before another bar is printed.
Okay, got it.
And my entries and so on are all occurring on this order flow platform, and I'm watching. So for example, let's say I'm short this trend down here in the S&P. I'm watching, where did the market consolidate last? So the market consolidated last. If I'm short, say up here, I can't draw on this because it's a live chart. It doesn't leave the line. If I'm short down here, and then the market pulls back, okay, I'm going to start using this little pullback, this consolidation, this fight that you see here between the buyers and sellers. I'm going to start using that to control risk, because if I'm correct, if I'm right, then the market's likely to have the energy to continue as it did here. If I'm wrong, it's likely to push through this battle zone, and at that point, I'm looking at getting out. I start to work my position. If I'm short, I'm starting to work bids to start to lighten up the position back to scratch. I'm managing trade in an active way. I'm not recommending this, but I'm on a fiber optic line.
You don't use stops, do you?
I don't, but I don't recommend it. You know, to trade at your own risk type of thing.
You use mental stops. You know, the last time I used a mental stop, my first stop was a mental institution. You ever hear that one?
Yeah, I heard that. That came to me from a bond trader in the pit.
Yeah.
The reason I don't use a stop is because I don't recommend it. You have to have, in order for you not to use stops, you have to have good psychology, good discipline.
Yeah.
And the reason I don't use a stop is because once I put a stop on, I'm just watching that stop getting hit. I'm not staying active with the auction, which is the whole approach of my trading. I do recommend a disaster stop no matter what. Like, I suggest that you have a platform that once you get short or long, it throws a 10-point stop in case the market goes haywire and it's too fast for you. You don't want to lose your whole account on one trade. But I'm managing risk. Yeah, I'm managing risk actively. Anyway, that's a lot to digest.
Yeah, great presentation. If you'd like, you can show your website and how people could follow up with you, get in touch with you if they're interested.
Sure.
And so you still work with traders, or you're not from a prop basis, but just using your software. Am I correct?
Well, I was part of a brokerage that was started in 2012 called Stage 5 Trading, and the idea is to bring brokerage, just your normal competitive online brokerage, but to create a community out of it. So there's a chat room and there's webinars, weekly webinars and things like that. And the idea is to slow traders down, which I think is the biggest caveat. People put money in and they just want to trade, and they don't give enough time to themselves to form an opinion and to actually gain experience, right? So that's
you can't learn it. You can't learn it. It only comes with time.
Exactly. You can't push through it just by taking bets all the time.
Yeah, you have to live through stuff. So go ahead.
Yeah, if you want to get a hold of me, just futurestrader71.com, and also you can find me on Twitter. I interact with people a lot on Twitter at twitter.com/futurestrader71. And if you have questions, just hit the contact button and just drop me a note, and someone here will try to answer you. Pretty soon, in the next couple of months, I'm releasing what's called a trader development program, which is the first step towards getting back into prop, where I'm making the training program for a prop firm available to the public, as opposed to just kind of a theory. It's more of exercises and things like that. That's coming out in the next couple of months, hopefully.
Are you in the Board of Trade building?
I was until a couple of years ago. I'm down the street, but I'm still in the financial district of Chicago. I'm still in the loop.
I started as a runner at the old Merc under Union Station a long time ago. So last time I was there, the floor looked like a bowling alley. It
is probably a bowling alley right now, or an ultimate fighting ring or something. I don't think there's much going on.
There's no edge anymore of going down there, is there?
No, there isn't. Most people are trading on, tablets anyway, and they're just arbing the pit. But there's not enough volume in the pit anymore to
Only the options pits were busy when I was there.
Yeah, and the STIRs, the short-term interest rates, are still pretty busy in the Board of Trades. Other than that, there's really no point in holding a seat and being down there.
Have you been converted to being a Bears fan?
I am a Bears fan. I like to play sports. I don't like to kind of go through and follow every little step that the team is taking with trades and everything else. All
right. Well, I was just going to prepare you for the heartbreak of being a Bears fan. So
I think heartbreak is part of being a Chicagoan.
It is, except the Cubs finally rectified everything
after a century.
Yeah, so that was a pretty big cycle. I want to thank you so much, Morad, and
I appreciate you having me on.
People could follow you at future singular, no less, _71 on Twitter. And
it's FutureStrader71. There's no underscore. It's just one word, FutureStrader.
Oh, really? Okay. All right. I appreciate that, and thank you so much for your time and very interesting approach. And I could tell you're a pro, and thank you, my trading warrior brother. I hope your profiles make pips and points and everything rain down on you and your associates.
I appreciate it. Take care. Thanks for having me.
All right.
Bye.
That was Futures Trader 71. Kevin, you're welcome. Okay, so that was Turnaround Tuesday. Everyone doing okay? Enjoy it? Let me just take a quick look at the markets. DAX is coming off. Let me give it to me. Just see what's happened during the interview. Gold still strong. Just want to take a look at a couple things I talked about. 62.50. Yeah, it's trying. Pound Aussie is trying. I also talked about Aussie yen. Okay, it is starting to fail from the 660. I'm with Steve on this one. I think we take this low out. And I don't know what else I really talked about. Euro yen is backing off a little bit. Still think that we need a stop hunt over this high. Could end up being a classic 3 drive here in Euro yen. It's now on Forex Stop Hunter's radar screen. Everyone have a great afternoon. Enjoy the rest of your summer day as we approach fall. My gosh, we're only a month away. Has everyone had a good summer hanging out with Blake and Steve and Greg and Nick and me and Stel? Have you enjoyed your summer? We've enjoyed hanging out with you guys. I think you'd enjoy it a little bit more if you just click the, thank you, Mauro. You just click the link and try out ForexAnalytix, because things will happen, I guarantee you, after this session. You're very welcome, Michael. And remember, most of all, don't just count your pips, count your blessings. And we'll see everyone tomorrow. I have a gold guy coming in here tomorrow, so be around with what's happening in gold. His name is Bill Downey at goldtrends.net. So you know what guys in the gold business say? They say, don't wait to buy gold and wait. See everyone tomorrow. You're very welcome, Andrea. Thank you, Steve. Thank you, Blake. Thank you, team. Thank you, Velu. Thank you, Stel. Adios.